be able to read it. This is just a summary of the costs of the actual entire package, which just shows how much there was actually in it. I think the two interesting things from this, the whole driver in terms of putting this together was that it had to be fiscally neutral. You know, we had to have a balanced package, but you can actually see in the 2010-11 year, the first column of numbers, we've actually got quite a big deficit there. But over the period, the 4-year period that they forecast, by the time we get to 2013-14, we get to what we call steady state. It's actually a fiscally positive package. The other thing of interest is obviously the sort of media message that the government has put out is this is everyone's a winner out of this package. And why might that be when your income tax goes down but your GST goes up? We can see personal tax cuts at the top there in terms of steady state, just over 4 billion of tax reductions in terms of personal tax. But the actual increase in GST under revenue raising, 2.5 billion. So they're giving away over 4 billion, but they're only collecting an additional 2.5 in terms of extra GST. So that's why people, when you just compare those numbers, most people are better off. Obviously, if you're in the property sector or in terms of depreciation, the money to fund that difference is coming from someone. But in terms of just individuals, that's why in general everybody was better off. Just in terms of watch this space, things that were announced in the budget as well that will be coming out over the rest of this year. Obviously there was a lot of media attention given to LEQCs and the concerns in the property sector. The government has announced what's called a full flow-through treatment for these entities. Under the previous treatment, your losses flowed through and basically you could deduct them at your top personal tax rate. But any income in that LEQC was capped at the company rate. So there was a difference between 30% for income and 38% for losses. So now they've announced a treatment which will flow through both the income and losses. And so they will both be taxed at the same rate. There was an issues paper released on budget night talking about exactly how that's going to be implemented for people. The government announced further reforms in terms of working for families. Obviously there was the change from investment losses on budget in the budget legislation, but they've got further concerns with some tricks and games people get up to basically increase their working for families, particularly around trust distributions, and there are going to be further reforms in this area before 1 April next year. They also announced a commercial fit-out review. So obviously there were the changes in the budget in terms of reducing the depreciation rate for buildings to 0%. The concern that officials and the government had is, well, what's the line between building and fit-out and building and other assets you may have attached, your air conditioning, for example. What's building and going to get 0% and what can you carry on and still depreciate as a separate asset. The sort of guidance and law in that area is a bit unclear. We did look at possibly putting something in the budget night legislation to give taxpayers more certainty and more guidance so they knew which side of the line particular assets would fall. But because under budget secrecy we couldn't really consult and make sure that we were getting it right, it was felt it was safe to actually have a review post the budget and if necessary to amend the tax rules to basically make sure people can carry on with their current treatment in terms of depreciating fit out. Any sort of clarification would go into legislation for 1 April next year. The other sort of announcement that was made was around the establishment of a GST advisory panel. Obviously the rate increase is the first time in 20 years we've increased the rate in GST. People have got a lot more complicated in terms of their systems, a lot of uncertainty as to what that may mean because they haven't had to deal with it before. What the government was worried about is making sure business gets enough guidance and that there's a channel for questions and to get clarification. So they've established a private sector advisory board. Basically it was announced the other day. It'll run from now until the end of the year, so over that transitional rate period, so that businesses or through your organisation, if you've got questions, you're unsure, you can contact this advisory panel and get some clarification. And if necessary, if there are things that need to be clarified in the law, then they can forward that on to government and to officials. So hopefully that will be useful for businesses in terms of certainty. I'm just going to hand over to Jeff, who's just going to cover off quickly some of the implementation issues for GST. We thought you might be quite interested in that, and then we can open the floor to questions.